SoFi Technologies has had quite the ride, my friends. They've been up, they've been down, they've been sideways and every which way. During the bull run in 2021, they were above $20 a share, believe it or not. They've plummeted as low as $4.24 per share in the last 52 weeks. Year to date, they're up 71%, but in the last month, they are down 12%. Wow. What a ride. So, first of all, I believe that the institutions like Bank of America, JP Morgan Chase, etc., Capital One, I don't think they're going anywhere, but I do think Gen Z and the generation that comes after them will increasingly do a lot of their financial services and banking at, if not SoFi, similar types of companies. There's a bigger focus on, we'll say, the customer, the user experience that you don't really get at the mega banks, to be honest. SoFi offers high yield savings accounts, not sponsored by the way, but SoFi, if you see this, I'm for hire. Anyway, so given that they offer a lot of benefits that you don't really get from a bank that has a lot of brick and mortar branches, and the fact that, let's face it, these days, who the hell wants to go into a local brick and mortar bank branch anyway if you can avoid it? I think they definitely have the potential to make some waves and do some disruption. Now, will it be SoFi that ends up, taking a substantial amount of market share in the distant future? I don't know that. It could be some other, fintech company that ends up stealing the day eventually. But I think SoFi, in a lot of ways, is moving in the right direction. To that point, we have very impressive revenue growth for SoFi. Now, I want to bring up the fact that at one point in time, share dilution was extreme. In fact, I think you'll find that they were doing a lot of their diluting back when their share price was at much higher points. And lately, that dilution has slowed down massively, while revenue growth remains robust. You definitely want to see that because this could mean that we're approaching, something of an inflection point, a rounding of the corner, as it were, where instead of diluting shareholders, they may start creating actual shareholder value instead of just burning their money. In terms of GAAP profitability, it seems like we're just barely off, right? They keep hovering around a nickel in per share losses. Now, their gross margins are great, of course, being an online-only financial services company. But they haven't quite been able to get to positive operating margin and profit margin. They're bleeding ever so slightly. Now, I know that a lot of the stuff with like pauses on student loans and such have been a burden on SoFi. Now, that stuff was due to, those repayments were due to start unpausing here in the last month or two. So I would actually expect for that to be potentially really beneficial for SoFi, for whom a big part of their business is student loan servicing or refinancing, rather. So could be good things in the next couple quarters for SoFi because of that. With regards to the balance sheet, considering that they're a bank, you definitely want to be looking at the balance sheet. So robust cash and equivalents position, which is definitely something you want to see, because if they're a bank, that means they've got deposits. Those high yield savings accounts, that they have, that they're paying you like 4 point whatever percent, those are considered a liability for them. They owe you, like that is money that they basically owe you, right? If you wanted to pull it out. So they need to have a good amount of cash on hand in case some of their customers do need to pull from savings, right? And that's reflected here in the liabilities. The deposits will be considered liabilities on the balance sheet. We would have to, I think, look at their actual financial statements to see how much of those liabilities are deposits. But trust me, they owe you that money, and it's considered a liability. Shareholders' equity comes in at about $5.2 billion, but I don't give them full credit because they do have over $2 billion, just over $2 billion in goodwill and intangibles. So really, their tangible book value here is just we'll call it a hair under between $3 and $4 a share for tangible book value per share. So yeah, they're basically trading at a bit of a premium on their book value, which I guess is understandable with the growth. For example, like for a big mature bank, you would probably want to pick them up more when they're at or below their tangible book value, simply because you may get some growth, but you're not going to get like amazing growth from, say, JP Morgan Chase, Bank of America, Barclays, etc. They've been around for like a billion years, and they're not like going out there looking to disrupt or anything. They just, kind of chill and collect on the status quo. This company, however, is trying to make waves, do things in a more modern and different way that's more appealing to, I think, the younger crowd that's yet to really come into their own. And as younger millennials, Gen Zers, and whatever the next generation might be, as they get older and get more financially stable, if they have loyalty to, say, SoFi, that'll mean very good things for SoFi in terms of how many depositors they have at their bank, how many people, for example, maybe use them for mortgages and other things in the future. The student loan refinancing thing it's kind of like the doorbuster, gets their foot in the door with that younger crowd. But then as they grow financially, they can then sell them on, big ticket things like mortgages and investing. They have, I believe they do have investing accounts. By the way, if you use any SoFi products, I want you to comment below and, tell me how you like the experience. I personally don't have any SoFi accounts yet. I've been considering doing it just as like maybe a little bit of due diligence to see what you're really getting into. Now, my own personal valuation on this, I was more of an interested party when they were below $5 per share. I think the case of both the growth and the valuation and the future, at that level, it was really, in my view, probably getting to the point where it was worth risking anywhere from 0.5% to 1% of my holdings in SoFi. It didn't stay that low long enough for me to end up actually pulling the trigger and ending up with any stock. But look, considering the fact that they've dropped 12% just in the last month and how volatile this thing is, it could potentially dip below that level again, and I may have another opportunity at some point. And if the numbers, keep improving the way they are, and I have another opportunity to get in close to that level where I was interested before, fantastic. I'd really like to take a closer look at it at that point. But for the moment, I'm kind of, I'm just sitting and waiting right now. Don't have any shares, don't have any immediate plans to get in. But if you personally have any SoFi stock, use SoFi products or services, I'd love you to comment below or join us on the Discord link in the description. Talk about SoFi and your experience with them. And as always, like the video, subscribe, please. I'm getting darn close to 1,000, and that would just be so awesome. Thank you, everybody. Have a wonderful day. See you around.